What's up, y'all? We back again with another video. I'm LowKeyAD. This is another weekly charting review. It's gonna be a quick video. Today is October 19th. It's around 9 o'clock p.m. Saturday. Again, we're gonna do a chart to prepare for the upcoming week, and we're going to review last week's video that I posted last Saturday to see overall what the market did and if some of our assumptions were correct or not. Alright, so let's get into it. Okay, last week I did have, based on my assessment, that the market was going to be bullish. As you see by these blue drawings right here, the potential of the market was going to I'm sorry, right here, because the market was right, I believe, right in this area when I recorded the video. So my assessment was that the market was going to retrace probably around this little gray zone that I have drawn right here in the background. Hopefully you can see it. I said it could go a little bit lower, I believe, and then it probably would pop up, reaching out to the take profit 1, take profit 2. So ultimately what happened is the market, for the most part, stayed in between these two zones, pretty much consolidating for the most part, which I thought was going to be a retracement. I mean, it did kind of retrace, but then it hit the bottom of the zone, rejected off the zone, and dropped some more, which in my opinion kind of invalidated this Fibonacci that I had, that I started right here and placed right here for my take profit 1 and take profit 2 to be right here, as the blue drawing shows that I wanted the market, not that I wanted, that I believe that the market could potentially move in. So with the Fibonacci being invalidated, I left the Fibonacci on it. I didn't take any trades, but ultimately the market still found its way to move up from the old Fibonacci that I had placed to this TP1 before it rejected and ultimately went bearish for a nice sell-off. I would say, let me remove this past Fibonacci now that we went over that. Clear up things a little bit. And I'm going to remove these drawings. Let's see if I can get this one done. Okay. That one can stay. When the market did pull back and it broke past this zone that I thought was going to be the retracement area is going to reject off of to continue being bullish, it broke through that, almost extended to this next zone, found support on that, did go back up above this zone. As you can see in this area, if you look closely, we have a head, a shoulder, and another shoulder, which is what I told you last week, I think close to the end of the video. An inverted head and shoulder is what this is called, and that kind of lets us know that we could probably look to get into some buys for this candlestick right here. This is a candlestick reversing pattern after this small retracement above this zone, retesting this zone, bullish engulfing candlestick. Most times in moves like this, I would normally get in right after this candlestick was to close for a buy, but again, I did not, because I don't believe I had my charts open when this started to form. I might have, but I don't remember looking at it as much. I probably was doing something. So by the time I did look at the charts, I think this red candlestick and this slight consolidation, if you will, started to form. We did have this bearish engulfing candlestick, which let me know that the market was probably going to sell off. But also, we know from looking at this entire area right here that the market has been consolidating. So it didn't make me too comfortable getting into any trades. So I ultimately waited and just continued to watch the market. This trend line from the past got broken. I guess you could say it was a slight retest. Oh, and mind you, I'm sorry. I'm looking at the market right now on the 4-hour time frame. So I'll go down to the hour time frame in a minute. But the market sold off. Actually went a little bit lower than this zone right here. Tried to go above it, but it wasn't ready. The buyers wasn't ready. Went a little bit lower. Made a full break of this zone. Retested. Then we got this strong wick right here, which means the market tried to sell off, but the buyers fought. Closed to a nice little doji candlestick. In this situation, I'll be looking to a lower time frame, which I'm not going to go into just yet. I probably would have looked for possibilities to get in around this area because of the immense sell-off that did take place previously. But again, I did not take any trades as of yet, but there was one trade before the market closed that I'm looking to get into as the week is about to start, which I'm about to share in a minute. But ultimately, before the week ended, the market went bullish. As you can see, after it rejected off this zone area right here, giving us this long wick. I like to call them exhaustion wicks, which allowed me to draw this other trend line. So now, like I said last video, I like to call this trend line, and when these trend lines connect like this, a trend triangle. So now I'm going to look for breakouts in the upcoming week. As of right now, we do not know what the market is going to do. We only could assess what we think it's going to do, and we do not take trades unless we have multiple forms of confirmation. So going into next week, I could see a few things happening. Obviously, it could be a strong bullish trend, break out on the top side of this zone, maybe a retest to go up, or what I believe more likely is to happen, based on what I see right here on my indicator, my RSI, I believe that the market will come down. Remember, for my Fibonacci, I already have my Fibonacci drawn. Started right here, ended right here. This red candlestick is my retracement. As you can see, it pulled back. The candlestick went down to the 50, pulled back, some creating this wick, but I still consider this a valid retracement. That doesn't mean I believe that the market is still going to just shoot up and be bullish. I still think we're going to get a full candlestick to the downside one more time when the market opens, probably Sunday or Monday. If we don't get any consolidation, be mindful, because we got to look to the past, and we could possibly consolidation. It could just continue moving to the right. That's also a possibility. But I do believe that the market will ultimately, let me get my drawing tool. This is kind of what I think is going to happen, or what did happen. The market will come down, probably to this area support. Take profit 1, take profit 2. Or the market will, let's see, could come down 61, maybe even to 70. Take profit 1, take profit 2. And the reason why I say that, almost similar to my video last week. I'm sorry, let me try to remove this so my screen isn't too bogged down. What is going on? Okay, guess you don't want to delete. Let's see if we can clear the old-fashioned way. There we go. So yeah, that's ultimately the possibilities of what I think is potentially going to happen going into next week. Again, do not get into a trade until you have multiple forms of confirmation. Look for candlestick reversal patterns. Me personally, I look for bearish engulfings, bullish engulfings, head and shoulder patterns, inverted head and shoulder patterns. I look at break and retest of zones, and also I use my indicator, my RSI. I look for the areas I really look for is if it's above this 70. I don't know if you can see this RSI. I'm sorry, my drawing tool is still on. I don't know if you can see on this RSI, this 70 right here, and then this 30 right here. If the market on the RSI is past those areas, obviously, if it's past the 70, it's overbought. If it's past the 30, it's oversold. I do use that indicator, not for complete confirmation, but just as one tool to use along with my other forms of confirmation on whether I'm getting for a buy or sell. But again, look at the market, look for your candlestick reversal patterns. Do not get in a trade till you have multiple forms of confirmation. Also, I would say, another reason why I think it's going to be bullish overall. Again, we do top-down analysis. So for top-down analysis, I usually start off at the week. I don't chart anything on the higher time frames. I just look to see the potential of what the market is going to overall potentially show me going forward. So I'll pull the screen back. I'll look to the left a little bit. So this area right here, I don't know if you can see it, this area right here, if I was to chart this week, I'll pull this all the way over. And as you can see, the market would have went up under the zone. Let me draw it just so you can see it. I'll erase it when I'm done. The market would have this would have been my zone. As you can see, the market went bearish, would have under this zone if we were to chart the week. Tried to push back up a little bit. I know it's kind of bogged down with my old Fibonacci, but if you look closely, you can see that the market tried to push up, but it ultimately rejected, creating a little wick. So it's slightly rejected above the zone. I'm going to delete this now. But that area is important to know. Ultimately, potentially, what I see on this area, a head, a shoulder, if the market was to go back up, we could potentially get this right shoulder, which would be a regular head and shoulders this time, which would indicate that the market is about to prepare for a sale, along with the fact that if we look right here on the RSI, the market was at the 70 when it was right here. So that was about what, 1, 2, 3, 4 weeks ago. I do think based on where this moving average is on the RSI and where price is showing on the RSI, that the market potentially would pull back. If it pulls back, I'm looking for it to reach somewhere around this area right here with the top of these candlesticks from the past, possibly creating not a head and shoulders pattern and then selling off. For the day, again, we're just seeing another, probably a slightly cleaner version of it, as you can see right here on the day. There's already a bullish move on the day. I don't know if I want to call this a candlestick reversal pattern. It would be a Morningstar doji. I don't know how comfortable I feel calling that because of the size of this candlestick. It's not really a doji. But as you can see, based on the RSI, that the moving average and price on the day have already touched. I believe it could pass a little bit past this, going up. Remember, like I said, on the week, anywhere in this area, if it reaches up, I could see it creating a shoulder, and then we will prepare to get in for some sales. Now we're going to look at, what's this, the 4-hour, which is where I started the video. So we're going to skip that and we're going to go to the hour. And when I chart, I normally chart off the hour. I know I recorded this video off the 4 hour, so, but doing a top-down analysis of higher time frames just allow you to see the overall move of what's potentially going to happen for the next couple of days to a week. So whether we're looking at the hour or the 4 hour time frame, which is the two time frames I look at the most when I take trades, we're still ultimately going to see the same things. We're going to look on smaller time frames to find, if we weren't able to find candlestick reversal patterns or head and shoulders, inverted head and shoulders, then we could go down to a smaller time frame and it would show us, potentially show us, the candlestick reversal patterns that we would be looking for. Yeah, so again, for GU for the upcoming week, as you can see on the hour up here, this candlestick finally retested after breaking this zone over here, rejected off of it, allowed me to create this trend line. As you can see, it was way overbought on the RSI, so that means the sale was coming. You saw the sale broke up under this zone right here, went back above it, rejected off the trend line again, pulled back. This right here created a candlestick reversal pattern, and even the star doji. Normally on even star dojis, I would get in for a sale. So if you would have gotten it for a sale, you could have made some money off this move right here. But I did not. So, but what it did allow me to do is, once it rejected, well, once it didn't reject, once the market decided to be bullish again, creating a bullish engulfing candlestick, it allowed me to draw these trend lines, creating my trend triangle. These type of bullish engulfing candlesticks, I normally don't get in because they're too large. So normally I just wait for the market to show me a little bit more before I decide to make a trade. As you can see, based on the RSI, it could push up a little bit more on the 1 hour up to possibly this trend line and reject. Could push it even further to this area of support and resistance. That's what I believe the hour is showing me. If I look to the past, you have these wicks, so I feel pretty confident in there will be a rejection either off this trend line or again this area of support. But remember, we trade what we see, not what we think. The market's going to do what the market's going to do. It could push up and have a strong trend and go against what my assessment is. So again, just monitor your charts. If you're not going to watch your charts, I would set some alerts so you can know when to potentially get into a trade. But yeah, I'm going to be looking for the market too, when the market opens on Sunday, to push up a little bit. Maybe that might be the complete move. It probably will push up more going into London session, wee hours in the morning, wee hours in the Monday morning. And then I'm going to be looking to get into sales for a drop off. But I doubt I take any buys. But based on what I showed you in the top down analysis, I do think there's going to be a bullish move first before it decides to sell off. And yeah, that looks like it's it for our GU analysis for the upcoming week. Again, this is October 19th, weekly review of GU. If you have any questions, please feel free to comment on this video. I'll try to get back to you. And yeah, another weekly review of GBPUSD. I'm out. That'll be cool.